Hey guys, Tony here. I just wanted to make a quick video kind of combining all of the TA that I've been looking at for all of the banks. You guys know that I'm bearish on Walgreens, but I've been looking at, JP Morgan Chase, Bank of America, Citibank, what are the other banks? Goldman Sachs, all the stuff, right? All the banks, all the big banks. Um, they all have a bear sentiment for July immediately coming down. If you guys look at Bank of America, you guys can see that it's actually starting to give me a bear signal for the month of July. Of course, we just started the month of July, so this isn't going to be an actual signal until for 25 more days. But that's Bank of America. Let me see if we can look up Chase, JP Morgan Chase, the same exact thing. Chase has actually been bearish since the month of June. So, and I guess I already did a TA on this. And my basic prediction for this was either, what did I do? Yeah, either a 36 or 44% drop. And I think the average drop was 277 days, 28 days, 277, 28 days. So yeah, it looks like my forecasts are here for JP Morgan Chase. What about Walgreens? Walgreens, you guys already know I'm already bearish. It looks like June actually closed. Sorry, not June, but July is actually showing clear signals of being bearish, and you can see that big candle drop to the downside. So every single bank that I've been looking at has been showing signs of a lot of bear momentum. And even if we throw the fibs on here from pandemic highs back in December of 2019, right before the pandemic hit, and we do the relative lows on the fib, we can see that it actually almost hit that 1.168 level on the fib, and this would have been actually a perfect look at that. So another thing, this would have been a perfect play for the breakout. Look at that, relative lows, relative highs. You're looking at the monthly chart. It broke previous highs, boom, broke that, and guess what? It rallied all the way up and almost actually hit that fib. You guys would have probably taken profit somewhere like $42 or whatever. That would have been your first. You would have been out of your 80% of the position right here. But that's a different story, right? It looks very probable that if July closes on the bear side, we're gonna come back and we are gonna be retesting what, 35 bucks. It looks like we might be retesting highs of before the pandemic hitting, because just look at the actual drawdown. So look at what actually happened before. So from highs all the way down to lows of, as soon as the reverse MACD and Stoke were giving signals of something happening, look at that. You saw a 30% drop in 27 days. Same thing happened right here for COVID. You had massive drops of from 355 all the way down to lows of, again, this is a black swan event, so it's a little bit different. You have a 48% drop right there in 28 days. But let's see another perfect example of when we actually have a perfect sell-off. So right here, we have another sell-off right here from 16 to lows of 11. So it really just depends on every single trigger on the monthly chart. There's been a massive drop, right? Like even back here, that's not a perfect sell-off. I wouldn't call this a perfect sell-off, but still, every single time the month triggers on the reverse MACD, we have some sort of big sell-off, and I think we're headed that way. To be completely honest, I think we might see anywhere between, a 30 to 40, maybe 50% correction within the next. I don't want to give timelines, just because they're kind of all over the place. But I would definitely say that we have already clear tops right here at 43 bucks. And I do think that banks are going to go all the way. Every single bank chart looks the same. And I do think that they're going to be correcting all the way to previous tops of pandemic prices. So I wouldn't be surprised to see Bank of America back at 35 bucks, or to see JP Morgan Chase back at pandemic highs, which is what, 138 possibly, or even going all the way down to like 61, 70 bucks and dropping a full 30 to like 40% in the next 100 to 200 days. It just definitely seems very, very probable to me. And buying like me, for example, buying puts at like what is this? What price would this be? 140. So buying a year outputs for 140, I would definitely be open to this play immediately right now. Coming, well, once July closes bear, because I don't want to. You guys know that I don't like doing anything unless there's confirmation, and I will be coming back to this bank play at the end of the month. But it does look like a lot of the banks are going to be rallying to the, not rallying, but dropping to the downside kind of heavy, and this kind of matches up with what I've been talking about, the 10-year yield and bonds. So the 10-year yield is basically the U.S. 10-year and how much you can actually make over the course of 10 years, right? It's basic macroeconomics. But the forecast I do have is in the next 270 days, I do think it's going to crash. We might even see a negative yield. And bonds, for example, you guys know I have a heavy play on this. Look at that. I bought back around here. I bought as soon as June closed confirmation. I bought somewhere here in 140. We're already at 145, and we had peak highs of what, 146. I mean, it's well underway. To be honest, it might actually clear before my forecast of 215 days out. So we might actually hit what I think it's going to hit. So what, like around 170 or something. I think it might hit 170. I thought it's going to hit. I thought it was going to hit from June close. 215 days out, at least 200 plus days. It might actually hit a lot sooner than that, and that is kind of concerning, because a very strong bond equals a weak stock market, and very low yields is what's basically making the bonds go higher, and it's going to cause a weaker stock market, because that means the dollar is also going to rise. There's just a lot. There's a lot of concerning things that are happening right now, that are basically pointing to a lot of bad things happening. So that's why I'm not necessarily selling all of my positions. I did sell a lot of my heavy positions, and I'm mostly cash, cash buying power right now. But again, it's mostly just hedging. The TOT play that I have is hedging, and if we do close the month of July for the banks on the bear side, I will be starting to buy puts for banks about a year out, because I think statistically there's a strong chance that all of those are going to hit, and banks are going to have a pretty massive impact to the downside. So I'll see you guys later.